Let's say I have $200,000 hanging around in cash in a savings account yielding 0.5%. That's $1,000 in a year. And okay, that's an option. But I wouldn't do that with my money. Instead, I'd invest it, of course, in a sensible index fund, and I'd expect a 7 to 10% return. At 10%, my money would earn $20,000 in the first year, and with the power of compounding, my money would double in about 7.5 years. Now we're talking. But to get the power of compounding to work, I'd have to keep that money invested and let it grow. And even if I wanted that $200,000 to produce income for me, I'd probably need to stick to something like the 4% rule, which says that I could pull out 4% each year adjusted for inflation, and it would last forever, probably. So that's $8,000 a year. Pretty nice, but not rocking my world. I'm looking to generate more income from that $200,000 right now using the wheel strategy. If you don't know, the wheel strategy is an option strategy where you sell puts and collect premium. And then if you're assigned shares of stock, you turn around and sell calls to collect more premium until the shares are called away. And you repeat the process. It's simple, but it requires a lot of capital to make it really interesting. I think $200,000 is about right. With the wheel strategy, I'm seeking a 24% annual return or $48,000 per year. Now to achieve this on a monthly basis, I need to generate roughly $1,000 per week. The thing is, I'm skeptical. I'm not sure it's possible to do this consistently, especially through market downturns, corrections, or especially crashes. But it seems sort of possible, and so I'm giving it a serious shot with serious money. Now I started trading the wheel sometime in 2020, but after a brief hiatus, I'm back at the wheel and taking it even more seriously than before. So let me show you what I'm up to. Let's start here with what I call my taxable dashboard. And this is a place where I'm just keeping track of how much profit and loss I'm making overall, net of fees, what my return is each month, and how that compares to the S&P 500. I'm also keeping track of how much money I transfer out of the account each month. And you can see that since I've started doing this in July, I transferred out $889 on August 1st. So for this month, I decided to only transfer out the amount that was over and above my $200,000 starting amount. Next, let's look at the wheel calculator. Now, if you follow another YouTuber named Marcus Heitkoetter, who does great content really on the wheel strategy, you should check his channel out for sure. But anyway, he created a calculator for the wheel strategy that is exactly like this. I recreated it. I saw what he had created and I just recreated it for myself. And that's what I've got here. And if we look over here under my goal, you can see that my goal is to generate 2% monthly income on $200,000. That's 24% per year, or $48,000, or $1,000 per week. And I've got a series of rules that I'm trying to follow, including don't do the trade if it doesn't meet the 24% annualized criteria. Only trade 14 days to expiration maximum. Trade 5 positions at a time in different sectors. I don't always follow that rule perfectly. Can buy back early if it beats 24% annualized. Avoid earnings and other binary events. And then under the rules, I've got a section where I'm keeping track of how I'm using my capital. So I've got $200,000 of starting capital, and here are puts that I have open. And so for each of these, this is how much capital is sort of tied up because if this position was assigned, I would need 23,600. And down here are positions where I'm long stock. So I was assigned 100 shares of Boeing, and that's taking up $23,500. And when you add all this up and subtract it from my starting capital, I've got right now 32,300 of buying power still available, kind of dry powder right now. And then jumping back over to this calculator that I recreated from the work of that other YouTuber, this helps me determine if I'm indeed getting the 24% annualized for any given trade. So for example, for ARK, I was looking at the $118 strike price with 69 cents of premium per share and expiring on August 13th. That was indeed 24%. If I only was going to receive 68 cents, that's 23%, not quite the 24% I'm looking for. And then if it gets too crazy, then it's going to change colors and be yellow because it's like, hey, this is great, 52%, but you might want to watch out. It's sort of a caution there. The premium might be too good. You might be taking too much of a risk there. And then Hood, this is Robinhood. This is a bit of a different story just because the They just had their IPO, and so the premium is really high in there right now. And so I'm selling a bunch of Robinhood puts that are way out of the money and still giving a really, really high premium. We're talking 58% annualized, 63% annualized, and then this one is even further out of the money, much more conservative, 25% annualized. And then I've got Twitter here, which is $65 strike price. I got 40 cents of option premium for that one. So that's how I determine if I should do a trade or not, if it meets that 24% annualized criteria. So let's jump over to my trading platform now, which is Tastyworks. All right, here are my positions. Most of these should look familiar now. All right, so we've got ARK, just sold 2 of these puts today, the 118 puts for 69 cents, nice, and off to a slow start, but we'll see what happens next week. Boeing, I did get assigned 100 shares of Boeing, and I sold some calls on that, rolled a couple times, so now we're out to an August 27th expiration, which means I'm just kind of sitting on this position and waiting to see what happens. It's kind of a boring position. I think I'll get out of it with a profit, but it's not going to be anything too earth-shattering. And then much more exciting is Robinhood over here, because as I mentioned, I've got puts at 3 different strike prices, 40, 39, and 36. And if all goes perfectly, I will have $967 of premium when all these expire worthless on August 20th. And that would be pretty great. And then Twitter, pretty standard type of position for me. I sold 4 puts, 4 of the 65 puts for 40 cents each, and not off to a strong start, but we have all of next week to see what happens with Twitter. And last but not least is Uber. Uber's been a great position for me. I was assigned 500 shares of Uber and signed at $45, and the share price has been hovering right under that $45, which is perfect because that allows me to sell calls right above that strike price. I sold 45.5 calls for 45 cents each, and there's 5 of them, so that's some nice premium there. And actually, if we go look at my options log, you can see just how good Uber's been doing for me. So this is my options log where I keep track of all my trades. And I have another video on this options tracker and how it works if you want to check that out. There's even a free download where you can get a copy and use it for yourself. But anyway, yeah, these are all my trades in here. You can see Uber where I got assigned, Boeing where I got assigned. But I just want to narrow down and show you the Uber trades. All right, Uber, and yep, just from July on. Perfect. So I sold some cash secured puts in Uber, collected some nice premium along the way until I was assigned at $45. Once assigned, I've been selling covered calls, 45.5 and 45, and also collecting some great premium here on the covered call side. Certainly possible that Uber is going to jump up next week and my shares will get called away at $45.50. If it does, that's good. That'll give me another $250 of gains, capital gain on the stock, in addition to all the premium. But be honest, I'm going to miss those shares because I really enjoy selling covered calls on them. All right, so that's what I'm up to with the wheel strategy, taking it seriously, really trying to make that 24% annualized return. And yeah, there we go. Thanks for watching.